Hello traders, welcome to episode 2. Welcome to the top-down analysis of the currency pairs. So for me personally, I only trade this pairs, which is gold XAUUSD and EURUSD. So these are the only pairs that I trade on my prop firm account. So when it comes to Forex, you don't need to trade a lot of pairs, as I keep on emphasizing. You only need to monitor just one or two so that you know the levels, the pace respects, and then you get to understand them. So that is all. Let us begin with gold. So we always begin our analysis on the weekly time frame. As you can see, gold is very, very bullish. Gold is very, very bullish, and we have just broken a new high. Gold was ranging, however, we've just broken a new high on the weekly time frame. We have broken a new high. So that is a break of structure. So that is a break of structure. And then our order block from the weekly time frame is that one. However, with the way price is moving, I don't think it's going to be returning to that level anytime soon. So that is the order block. And then you can mark your demand zone on the weekly time frame. So that is our demand zone. That is our demand zone. So that is all that is visible on the weekly time frame. And then if we go to our daily time frame, on our daily, we can be able to adjust our levels. So on the daily, that is the order block. However, looking at the way price is moving, I don't think we are returning to that level anytime soon. So that is all on the daily time frame. And then on the 4-hour time frame, we can be able to get the recent price action. So what happened here is price broke structure, and then it came back to that order block, which caused that break of structure. That is the one that dished out that move. So I like to take my time to try to study price to see how it moves, how it moved. Then I will know my next line of action. And then we had another break of structure there. We had a break of structure. We had a break of structure, and then that is the order block. However, price did not react from that order block. Instead, price reacted off. Instead, price reacted off the FVG. So price reacted off the fair value gap. Of the FVG from the 4-hour time frame. That is it. And then we had a break of structure there. So we have a break of structure. So that is the break of structure. And then that is the order block which caused that break of structure, which is there. So that is the order block which caused that break of structure. However, price did not react from the order block. Instead, it reacted off the fair value gap. So gold, most of the time, it likes to react at the FVG. So that is what we have. And then we have we had a break of structure right there. So that is the break of structure. And then from the 4 hours, that is our order block where we are waiting for price to come and mitigate. That is the order block where we are waiting for price to come and mitigate. And then if we go to our 1 hour time frame, you can be able to see the price action that happened. So we had a break of structure right here, and then price did not react from the order block in the 1 hour. This was the order block. So this was a trade I took last week, which hit TP. So last week was NFP, and I managed to hit TP on gold last week. So last week I was in profit on gold. So this was a trade that I took on gold last week. So this is the move that happened last week. We had a break of structure right there. And then we had a break of structure. That was the order block. Price did not react from the order block. It reacted on the FVG. And as I always emphasize, if price breaks structure and then it does not mitigate that fair value gap or order block, whatever break of structures that you have, that price breaks, those are just traps, those are inducement levels to try to trick traders into placing positions there, and then price will do what? Will clear them out to go and tap into the right order block, like that one. If price break structure and then it did not mitigate the order block of fair value gap, and then it creates it creates another high and then breaks it. So whatever order blocks that price leaves behind there, that is just liquidity. That is just inducement or liquidity set to trap traders into placing a position there. Look at what happened. Price broke a high, and then other traders thought this order block was no longer valid, so they placed a trade there. What happened? They became the liquidity. Price swept them out because when they put an entry there, obviously they will put their stop loss below that line, and then price swept them, came to tap into our FVG, and then proceeded. So this is a trade that I took on gold last week. And then let us proceed. So we broke a new high. My TP was around this high. That is where my TP was. My entry point was at this FVG. And then right now, price broke structure. That is our order block. That is our order block. That is our order block. And then that is our FVG. That is our FVG that is present. That is our FVG. That is our FVG that is present. And then price broke a new high there, but I'm seeing that level as liquidity because price did not yet mitigate our order block down there. So price broke a new high. So price broke a new high. So I'm not going to place an entry at that order block because I see that as inducement. I'm seeing that as liquidity. So I'm seeing that as liquidity. That is the liquidity that price will sweep and then to come and step into this order block or FVG. And with the way price is moving, my last entry was from an FVG. So I'm going to put a buy limit on gold because I am expecting for price to come back and sweep the liquidity and sweep this liquidity, tape us into the FVG order block and then continue pushing upwards. So that's what I'm expecting on gold. So the coordinates, I'm putting my entry price at the FVG because my last trade, looking at the way price is moving, and gold likes to react at FVGs, like just like this previous trade that I took. I'm gonna place my entry there, and then my stop loss slightly below the order block, and then my TP has to be that high. So the coordinates for gold, entry price has to be 3573.96. My stop loss at 35.69, and then my take profit will be at 3646.47. Let me remove these horizontal lines. This one's just guide me to be able to get the coordinates. So it's going to be a buy limit. It's going to be a buy limit on gold. And because gold is very volatile, even with 0.01, can still make quite some good profits. So a buy limit, our entry price is going to be at 35.96. Stop loss at 35.69, and then our take profit is going to be at 3646.47. So that is the pending order that you can place on gold, because from the look of things, it's looking like everything is aligning. Our FVG price has just broken this high. Our order block present, our FVG present, and our liquidity that price will sweep is present. At least that makes our trade more valid. So that is all on gold. That is where I stop my analysis on my entry time frame, which is 1 hour. And then if we go to Euro USD, from the weekly time frame, that is where we start our analysis. Start by marking our supply and demand zones. We start by marking our supply and demand zones. So that is the supply zone. That is the supply zone. And then our demand zone. That is our demand zone. That is our demand zone. And then already from the weekly time frame, we can know the bias. The bias is bullish prices moving from a demand headed to the supply zone. So we still have some pips that needs to be covered for us to get into that supply zone. So our bias on EURUSD is currently bullish. So place buys on EURUSD from the daily time frame. We can be able to mark our resistance. So from the daily, we can mark the resistance level. So that is the resistance level. The resistance level and our support. Into our support level. So EURUSD has been ranging between this support and resistance. That is our support level. And then from the daily, it can be able to study the recent price action. You can see that price has broken. Price has broken that high. That is a break of structure. That is a break of structure. That is a break of structure. And then our order block, that is where price is currently. That is the order block where price is currently reacting. That is the one that is dishing out that move. That is our order block from the daily time frame that is dishing out that move. So we are expecting price to go in and break that high and proceed to go and break this resistance, which will take us to our support, to our supply zone. From the 4-hour time frame, that is a break of structure. That is a break of structure. And then from the 4 hours, our order block from the 4 hours is that one. That is the order block from the 4 hours. However, price did not react from the order block. Instead, it reacted from FVG on the 4-hour time frame. Price reacted off FVG of FVG. And then if we go to the 1 hour time frame, so on the 1 hour time frame, last week, this is the trade that I took on Euro USD. I also closed in profit. My take profit was somewhere around that high. So it was hit around NFP. So this was the NFP candle. So let me break down the trade that I took on Euro USD last week. So on Euro USD, there was a change of character at that level. So that was the change of character. Price changed from buying to selling. And then it came back to tap into the origin, which caused that change of character. So it came back to tap into the order block, which caused that change of character. And then there was a break of structure. I'm just breaking down the last week's trade that I took, and then we'll study the recent price action. So that was a break of structure. So that is a break of structure. And then the order block, which caused that break of structure, was here. So this is where I got my entry last week. Actually, this was a swing trade. I took it on Wednesday, and then I held it for 3 days. I closed it on Friday. So it took Wednesday, Thursday, and Friday, 3 days for this trade to hit my TP. So I marked my order block. I saw the break of structure, and then liquidity was present, which was that one. So that is the liquidity that price swept. Because price had not mitigated this order block. So whatever break of structure that price creates, that is just liquidity. So that was the break of structure. That was the break of structure. And then I saw that as liquidity because price did not mitigate this order block. So whatever origins that price creates, this is just liquidity. And then price swept the liquidity, came and tapped into my order block. My entry was around somewhere here. And then I entered, held the trade for 3 weeks during NFP. My TP was at that high, which price hit during NFP, which was last week, Friday. And then there was a break of structure. That is a break of structure. That is the break of structure. And then that is the order block, which caused the break of structure, which price came back to tap in. By the time price tapped in this order block, I was not watching. I just set my my trades and was doing something else. So price broke structure and then it came back to tap into the origin, which caused the break of structure, and then it dished out that move. This was the NFP move. I was not here that time, but there was another break of structure. Which is that high that price broke. So that is a break of structure, and then that is the order block, which caused that break of structure. So this is the move that happened today. Unfortunately, I did not take it. I was not, by the time I came back to my charts, this move was already halfway to TP. So I just left it because I don't like entering trades halfway. When I came to check my charts, the move was somewhere around here and TP is just there. So I just decided to let it play out. So there was a break of structure. Price came back to tap into the FVG, did not mitigate the order block. Price mitigated instead there. Instead, price mitigated the fair value gap. Instead, price mitigated the fair value gap. So this is the move that happened today. Unfortunately, by the time I came back to my charts, price was somewhere around that level. So I did not want to enter in the middle of a zone because our TP was just there. Otherwise, my stop loss would have been somewhere which would have been a very wide stop loss. So I just let the trade play out. We do not chase price. If you miss an entry, there are a lot of opportunities in the market. You just have to be patient. The most underrated trading skill is patience. Patience is key. Sometimes I wait for trades for days. Wait for trades for days, and then you need to hold your trades for days before they hit TP. So right now we have broken a new high. So this is the trade that I'll probably take, because this break of structure is indicating to me that price is still breaking structures to the upside. We are still pretty much very bullish. So that is there. That is the new break of structure that we have. And then our order block. That is our order block right there. That is our order block. So that is there. That is the order block. So that is the order block which caused that break of structure. So for me, I'm seeing that it's an opportunity to place my traps. My entry price is going to be at that order block, which is that line I'm placing there. And then my stop loss slightly below that low. And then my take profit, I'm going to use the daily time frame for this take profit, which is going to be that swing high, that one. So the coordinates place the coordinates going to be a buy limit on EURUSD. Entry price is going to be 1.70520. Our stop loss is going to be at 1.17 304. And then our TP, I'm going to use that swing high. That swing high, because price is looking like it's going to break that high. And then let us place our buy limit on Euro USD. New order, pending order. Pending order is going to be a buy limit. And then the volume I'm going to use 0.01. Entry price is going to be at 1.17520. Our stop loss is going to be at 1.17304. And then our take profit is going to be at 1.18300. So that is the pending order you can place on Euro USD. So that is all, traders. That is how I do my top-down analysis every week. So the episode drops tomorrow, which is Tuesday. I always do my analysis on Mondays, and then the episode will be dropping every Tuesday at 10 o'clock. So that's it, traders. If you did get something out of this video, do give it a thumbs up, drop a comment in the comment section, and then I'll see you in our next top-down analysis video, which is next week. Happy trading.